Hi everyone, good evening. So this is CA Aishwarya from ClearTax. So I will be the speaker of today's session. But we will wait for 5 more minutes for other people also to join. So we will start the session exactly at 5 p.m. So we will start the webinar. But meanwhile, can you guys please give me a thumbs up if my audio and video, everything is proper. And meanwhile, I'll also share my screen. Give me a minute. So I'm also sharing my screen. Okay, cool. Thank you. Bye. So yeah. So first and foremost, I welcome all of you to today's session, which will be all about the Smart ITR filing. So here we will be talking about few important points for ITR filing, as well as I will also give you a walkthrough of clear tax filing also, right? So before we start with the actual content, actual session, let me quickly give you the introduction about me. So I am a chartered accountant by profession. So I am associated with ClearTax for more than a year now. So here basically I handle everything related to the ITR filing of individuals, their notice management, the tax planning, tax savings and all. Apart from ClearTax experience, previously I have also worked with Indian as well as Australian taxation, GST part and accounts, audit and all those things. So this was a brief and quick introduction about me. Now talking about the session, so as you all might be aware that it will be revolving around the ITR filing for assessment year 25-26. Now, let us quickly see what is the agenda of today's session. So these are the few topics that we will be covering in detail in this session. So first we will be talking about what are the important points or what are the few important things which you should keep in mind for assessment year 25-26 filing. Now, when I say assessment year 25-26, I necessarily mean financial year 24-25, for which you need to file your income tax return in few days' time. And what is the due date? So that is something I will cover in my upcoming slide. Then we will be talking about what are the tax slabs that we have under both the regimes, right? So again, all of you might be aware that now we have two different regimes. Either it is old tax regime or it is new tax regime. So in both the regimes, the slab as well as the rates are different. So that is something we will understand about what are the tax slabs that we have under both the regimes. Again, this will be restricted only for assessment year 25-26. For assessment year 26-27, the slab and the rates are different. But in this particular session, we will restrict all our discussion with regards to only assessment year 25-26. We will talk about what are the important documents that you should keep handy while filing your income tax return. Then comes what are the few mistakes that you should avoid while filing your income tax return, right? So again, the documents are not an exhaustive list. So here we have covered only few important documents and the mistakes that you should avoid. Apart from that, there can be other documents also. So depending upon the type of income that you have, depending upon the investments that you have done. So there can be other documents possible also, right? So this is basically an inclusive list. Then we will do the comparison between old and the new tax regime. So this is something, people are very confused with about which regime to go with, or what are the various deductions which are available under old regime, new regime, what is not available under new regime. So here what we have done is, again, we have taken the most commonly taken deductions or the investments, and we have seen whether it is allowed under old regime and new regime also. Right? So this will help you to save your taxes. So depending upon the regime that you are selecting, so you can see whether a particular investment is allowed as deduction or not. So once we are done with this explanation about the important points for assessment year 25-26, then I will give you a quick walkthrough of clear tax filing. Now, that is to say, if you are opting for clear tax to file your income tax return, in that case, how easily you can do it and what are the simple steps that are involved here if you are filing your income tax return through clear tax website. Again, this discussion will be limited to only form ITR 1 and ITR 4 users only, because necessarily ITR form 2, 3 are not yet completely released by the income tax department. So till now we have only ITR 1 and ITR 4 being released. So this discussion is basically limited to ITR 1 and ITR 4. Basically, this is for only for your walkthrough purpose. So this will be the agenda of today's session. So once I'm done with my explanation, we will also have 15 to 20 minutes of dedicated Q&A session wherein you can pitch in your questions and I will take up those to answer. But in this particular session, so you might not be allowed to, unmute your mic and ask your questions. So what you can perhaps do is you can start putting your questions in the Q&A section, right? So I request all the participants to please put your questions in Q&A and not in the chat box. Please put it in the Q&A session. So as soon as you're getting any sort of doubt when I'm explaining anything, you can put it in the Q&A section. And also when we have dedicated Q&A, at that time also you can put it in the Q&A. Again, I'm repeating, you need to put the questions in the Q&A section. Please do not put it in the chat box. Now, having said that, let us quickly get started. So as I already said, this discussion will be based on assessment year 25-26 filing only, right? Now, what are the important points for assessment year 25-26 filing? First thing is here, when I say assessment year 25-26, I necessarily mean financial year 24-25. Now, for this particular assessment year, if you're opting for new tax regime, in that case, there are three major changes that you should keep in mind. First thing is the standard deduction. So now if you're a salaried individual, you will get a standard deduction from your salary income. Till before assessment year 25-26, it used to be 50,000 under both the regimes. But now if you're opting for new tax regime, in that case, this standard deduction limit will be 75,000. But under old regime, it is still 50,000 rupees only. Only if you're opting for new tax regime, in that case, it will be 75,000. Then talking about the deduction for the family pension. So if you are receiving any sort of family pension, right? So if you are receiving any family pension, in that case, you can also claim a deduction from this. So here the deduction from your family pension, if you are opting for new tax regime, will be 25,000. That is to say, if you are opting for new tax regime, you can claim deduction for your family pension up to 25,000 rupees. Next point is deduction for the employer contribution to NPS, right? So again, if a person, that is if an employee is opting for NPS, National Pension Scheme, in that case, a similar matching contribution is also done by his employer, for which an employee can take a deduction in his return of income. So this deduction has been increased to 14% of your basic salary if you are opting for old tax, if you are opting for new tax regime. But if an employee is opting for old tax regime, in that case, this deduction will be limited only up to 10% of your basic salary. Only if you're opting for new tax regime, in that case, it will be increased to 14% of your basic salary. Then talking about the capital gains, right? So when we talk about capital gains, so there are lots of changes which have been done, particularly from assessment year 25-26. First point is the reduction in the holding period. Now, please understand that whatever type of asset that you're holding, right? So that will be classified based on the period of holding. That is for how many months or for how many years you're holding it. Earlier, we used to have three holding periods, that is 12, 24 or 36 months holding period to classify a particular asset as long-term or short-term capital asset. But this 36 months holding period has been completely removed. So now we only have 12 or 24 months to classify a particular asset as a long-term or short-term. Now let us take an example. Let us suppose say if you are holding a listed equity shares, equity-oriented mutual funds, so that will be classified as a short-term if you are holding it for less than 12 months. And if you are holding it for more than 12 months, in that case, it will be considered as your long-term capital asset. But for example, if you are holding any land and building or any house property, in that case, we need to consider 24 months as your holding period. And apart from that, any other asset, so again, that will be also classified as long-term or short-term based on 24 months holding period. Second and the most important point is the indexation benefit removal. Now, if you used to have long-term capital asset, you used to get the indexation benefit. Now, this indexation benefit is nothing but to compensate for the inflation that is happening every year, right? So in order to compensate that, indexation benefit was introduced earlier. But from assessment year 25-26 onwards, this indexation benefit has been completely removed. But there is one exception to the same. So if you are selling any land and building which you have purchased before 23rd July 2024, in that case, you will get two options, either to go with indexation or to go without indexation. So if you are going with indexation, in that case, 20% will be the tax rate. And if you are going without indexation, in that case, 12.5% will be the tax rate. So again, this is the option given to the taxpayer. So whichever option is more beneficial for a person, he can opt for the same. But again, I'm repeating, this will be applicable for the land and building which you have purchased before 23rd July 2024. Then talking about the tax rates here. Now, all your long-term capital gain, that is from assessment year 25-26, all your long-term capital gains will be taxed at 12.5%. Coming to short-term capital gains, so there are two different rates here. So first is all your financial assets, that is the equity, listed equity shares, equity-oriented mutual funds, all these things will be taxed at 20%. And if there are other assets, like for example, land and building, so that will be taxed as per your normal slab rates. So these are the tax rates for both long-term and short-term capital gain. One important point here is if you are having any long-term capital gain on sale of listed equity shares, equity-oriented mutual funds, in that case, you can claim an exemption. So if your gain is up to 1.25 lakh rupees, you need not pay any taxes on the same. But if your gain is exceeding 1.25 lakh rupees, then whatever extra is your gain, on that you need to pay taxes at the rate of 12.5%. Earlier, it used to be 1 lakh rupees, but from assessment year 25-26 onwards, it will be 1.25 lakh rupees. So this is about the changes that were there in assessment that will be there from this assessment year 25-26. Now, one important point here is the due date. Now, kindly note that earlier due date for filing your assessment year 25-26 return was 31st July 2025, which has been now extended till 15th September 2025. Again, I'm repeating, the due date for assessment year 25-26 ITR filing is 15th September 2025. So kindly make sure that you are filing your income tax return well within the due date, which is within 15th September, to avoid any late fees or penalties or interest. Now, quickly talking about the tax slabs that we have. So under, again, both old and new tax regime, we will be discussing here. But this, whatever tax regimes, whatever the slab and the rates that you're seeing on this particular screen, so this will be applicable only for assessment year 25-26. Again, for assessment year 26-27, the slab and the rates have been changed, but this discussion will be only restricted to assessment year 25-26. Now let us talk about the regimes. Now let us talk about the slab and the rates that we have under both the regimes. First, let us talk about for the old tax regime. So here, if you are opting for old tax regime, in that case, if your income is up to 2.5 lakh rupees, you need not pay any taxes, rate will be nil. That is to say 2.5 lakh rupees is the basic exemption limit if you are opting for old tax regime. Then if your income is between 2.5 to 5 lakh rupees, in that case, rate will be 5%. For your income between 5 to 10 lakh rupees, 20% is the rate. And if your income is exceeding 10 lakh rupees, it will be 30%. So this will be followed by health and education cess at the rate of 4%. Now, surcharge will come into picture if your total income is exceeding 50 lakh rupees, right? So surcharge is not applicable for each and every individual. Only if your total income is exceeding 50 lakh rupees, surcharge will be there. So we have different rates of surcharge depending upon your total income. So this can go from 10%, 15%, 25%, or 37%. So this is for old tax regime. Now, one important point to be noted here is, so as I said earlier, that 2.5 lakh rupees is the basic exemption limit under the old regime. But this will vary according to the age of the taxpayer. So if a person is aged between 60 to 80 years, in that case, this basic exemption limit will be 3 lakh rupees. And if that person is a super senior citizen, that means if he is of age more than 80 years, in that case, 5 lakh rupees is the basic exemption limit. But this increase in basic exemption limit is applicable only if you are opting for old tax regime. So if you are opting for new tax regime, in that case, in spite of your age, there will be only one basic exemption limit, and that is 3 lakh rupees. Now let us talk about the slab and the rates under the new tax regime here. So here, if your income is between 0 to 3 lakh rupees, you need not pay any taxes, rate will be nil. That is to say 3 lakh rupees is the basic exemption limit. For your income between 3 to 7 lakh rupees, 5% is the rate. 7 to 10 lakh, 10%. 10 to 12 lakh, 15%. 12 to 15 lakh, 20%. And if your income is exceeding 15 lakh rupees, you will be falling under 30% tax bracket. So this will be followed by health and education cess at the rate of 4%. Again, surcharge will be there if your total income is exceeding 50 lakh rupees. So depending upon your total income, we have different rates of surcharge. So if you can see here, right, in this particular slide, So if you can compare, the slab and the rates under the new tax regime are much more beneficial when we compare it with the old tax regime. That can be in the form of increase in the basic exemption limit, or that can be in the form of beneficial slab and the rates, and most importantly, for the 30% tax bracket, right? So if you're opting for old tax regime, in that case, if your income is exceeding 10 lakh rupees, you will be falling under 30% tax bracket. But in the same case, if you are opting for new tax regime, in that case, for your income that is exceeding 50 lakh rupees, you will be falling under 30% tax bracket. So again, this way, the new tax regime, the slab and the rates are much more beneficial from a perspective of a taxpayer. Now, talking about what are the documents that you should keep ready or that you should keep handy while filing your income tax return. Now, so depending upon the sources of income, so we have jotted down few important documents which you should keep handy. First thing is, I understand that most of you are salaried individual. So in that case, you should obtain Form 16, a complete set of Form 16. That is Form 16 Part A, Part B, and annexed to Form 16 Part B. Right? So this you can easily get from your employer. So you can reach out to your HR or payroll department there. So they will be providing you the Form 16. So if you're a salaried individual, in that case, Form 16 becomes the very important document for you. And in case if you have switched jobs between a financial year, right? So in that case, from everywhere, that is from all the employer, you should have this Form 16. Next, if you're claiming any HRA, that is house rent allowance. So if you're claiming this exemption, in that case, you should necessarily have rental receipts, rental agreement. And if you're paying more than 1 lakh rupees as your rent to your landlord, in that case, you must also obtain a landlord PAN card number. Then comes the bank statements. So if you are receiving any sort of interest, so that can be SB interest, FD interest, in that case, you can get the interest certificate, interest statement, or bank statement, right? So any of this document will suffice. Then if there is any TDS reduction on your interest income, necessarily it will be on your FD interest. So in that case, you will also get a TDS certificate from the concerned bank. So you need to collect that also. Then if you are claiming any housing loan, right? So that can be interest or principal repayment. So if you are claiming it, in that case, interest certificate from the bank or the financial institution will be the necessary document. So here, please understand that you cannot get a provisional certificate. So that is not a valid proof. So once the year ends, for whole of the financial year, whatever the actual payment that you have done, so necessarily the name will be final interest certificate. So you need to obtain the same. Then if you have done any sale of any immobile property, that can be land, building, or any house property, in that case, the sale and the purchase deeds, so that will be necessary. And in case if you have done any sale of mutual funds, equity shares, any bonds, or if you are into any F&O trading, intraday trading, in that case, you should get a capital gain statement from the concerned broker. So from whichever broker you are doing all these transactions, so from them you need to get a capital gain statement. Then comes the most important two documents, which is Form 26AS, EIS, and TIS. Now, all these three documents you will get easily from the income tax portal. So once you log into your income tax account, you need to download this Form 26AS, AIS, and TIS. Now, let us understand what is Form 26AS, what is AIS, TIS. Now, Form 26AS necessarily contains all those details of income against which TDS has been deducted. Like for example, if TDS is deducted against your salary income, interest income, dividend income, so all these details will be reflected in your Form 26AS. Talking about AIS, which necessarily stands for Annual Information Statement. So basically in this, all your income details, so that can be your salary, that can be your rental income, that can be dividend, interest, sale of any immobile property, sale of equity shares, mutual funds, everything will be reflected in your AIS. And TIS is nothing but tax information statement, which is necessarily the summarized form of AIS, right? So in AIS, each and every item will be there like single line item wise, but TIS is something which is a summarized format, or which basically contains the total amount. So these three documents you should have, you should check this before filing your income tax return every year. Next is if you are claiming any sort of deductions, right? So that can be any Chapter 6A deductions, or that can be any exemptions which you are claiming. In all those cases, whatever is the necessary investment proof that you have done, so that needs to be there. Like for example, if you're claiming any insurance premium, right? So in that case, insurance premium paid certificate should be there. So like this, whatever deductions you are claiming, for that necessary proof should be there. So these are the documents which you should keep handy while filing your income tax return every year. Talking about what are the various mistakes that people are usually doing, which you should completely avoid, so that you should not end up getting any sort of notices or any demand notices, right? So again, this list is an inclusive list, not an exhaustive list in itself. So there can be other points also, but these are the few common mistakes which we have seen people doing it, right? So in that, first comes choosing the incorrect income tax form. So now please understand that depending upon your residential status, depending upon your total income, depending upon your sources of income, there are different income tax forms that you need to select, right? So kindly make sure that depending upon your sources of income, depending upon your circumstances, you need to choose the correct ITR form. So if you are making any mistake in choosing the incorrect tax form, in that case, there is a high chance of you getting defective notices. So kindly make sure that whatever income sources that you are having, and depending upon the total income level, you are choosing the correct income tax form. Then comes assessment year, right? So as I already said, the assessment year that is relevant for us now is assessment year 25-26. So kindly make sure that while filing the income tax return, you are quoting the correct assessment year. So if you're quoting any wrong assessment year, let us say if you're filing it for previous years, in that case, there is a high chance of double taxation, penalties, interest, and all those things. Then comes the personal information. Now, when I say personal information, this can be the PAN number, Aadhaar card number, your name. So that can be first name, middle name, last name, your contact details, your address, your bank account details, right? So all this will be considered as your personal information. Now, most of this information will be pre-filled from your income tax account, but it is necessary to check whether all the information is correct and it is correctly updated. And also, if you want to make any necessary corrections in the contact details, address, and all those things, so you can make the same. So kindly make sure that before filing your income tax return, you are checking this thoroughly. Then comes reporting all your incomes. So we have seen people not reporting their capital gain income, interest income, dividend income, and all these things, right? Now, previously I also said that in AIS, the details of all your income will be reflected, right? So from whichever sources you are getting the income, so everything will be reflected in your AIS. So which is already there with the income tax department. So if you are missing any sort of income, so that can be purposefully or that can be by oversight. So income tax department can easily catch it, can easily come to know that you have this source of income which you have not reported in your income tax return. So, and easily you will get a notice within few days time. So kindly make sure that whatever sources of income that you have received in a particular financial year, everything is reported and everything is reported correctly, right? With the correct figures. So you should not inflate or you should not decrease the income. So whatever has been correctly received by you, so all this income should be correctly reported in your income tax return. Then comes reconciling your income as well as TDS with Form 26 AS and AIS, right? So as I already said, your Form 26 AIS will contain all the details, but it is not necessary that the details in the AIS and 26 AS is correct. So there can be mistakes in the Form 26 AS or AIS also. So in this case, what you need to do is you need to correctly check these two documents before filing the income tax return with your income details, right? So whatever proof that you have with regards to income, so you need to cross check it with Form 26 AS or AIS. If everything is correct, then you can go ahead and report all this income. If there are any mistakes, in that case, you need to either reach out to your employer, the bank, from whomever the mistake has been done, or you can reach out to income tax department also if there is any mistake in Form 26 AS or AIS also. So that is to say, kindly make sure that you are reconciling your income as well as TDS details with the Form 26 AS and AIS. Next comes the most important point, which is after submitting your income tax return, right? So once you have checked all these things and once you have reported your once you have filled your income tax return and you have submitted to the income tax department. Next and the most important step here is to e-verify your income tax return. Now, once you submit the return, in that case, the return is not completely submitted to the, or it is not completed yet. So the next and the last step is to e-verify your income tax return. Now, how you can e-verify it? You can e-verify it with the help of OTP, or you can e-verify it with the help of EVC, or you can directly send this via post to CPC Bangalore also, right? But kindly make sure that you are completing this e-verification process within 30 days from the date of the filing, right? So if you are not doing it, in that case, it will be considered as invalid income tax return. So please do not miss this step. As soon as you file the income tax return, immediately do the e-verification. But in case due to any reasons, if you are not able to do it, kindly make sure that you're completing it within 30 days from the date of the filing. Now, next comes about the notices as well as the communications, right? So once you file the income tax return, you will start getting communications from the income tax department. That is to say that your return is completed, or if you are receiving any intimations. So everything, all these communications will be coming from the income tax department. And in some cases, you might get some notices also if there are any mistakes in the income tax return that you have filed. So once you receive this, any sort of communication notices from the income tax department, first step is you should not panic and you should not ignore it, right? So we have seen people just ignoring it. They will not respond to the notices, they will not take the necessary action, and they will simply ignore it, right? So that is not the correct solution. So what you need to do is you need to read through the notices or the communication about what they are actually telling, right? So accordingly, if you can solve it on your own, well and good, you can do the same. Otherwise, you can take a help of the tax expert, a tax consultant, or CA. So they will be able to help you better there. And in whatever is the notices or the communication telling, right? So you need to read through it correctly, and you need to take the necessary action, either to pay the demand that they are asking, either to file a revised return, or to give the documents that they are asking for. So whatever is the necessary possible solution or the action from your side, you need to do it. And each notices and communications will often come with a due date, right? So that needs to be resolved, or that needs to be replied in a time bound manner. So kindly make sure that you're not ignoring the notices and you're not panicking. So reach out to the concerned person, and whatever is the possible action from your end, you need to take the same. So these are the few mistakes which you should avoid while filing your income tax return. Now, talking about the deductions and the exemptions which you can claim under both old and the new tax regime, right? So here again, we have not covered each and every deduction and exemption. So what we have done is here, whatever is the important deductions or the most commonly taken deductions or exemptions. So that is something we have covered here. And we have seen whether it is allowed under old and new regime or not, right? So now talking about the home loan interest. So if it is a self-occupied house property, in that case, this deduction will be allowed only under the old tax regime and not under the new tax regime. And under old tax regime also, it will be allowed up to 2 lakh rupees only. Then talking about ATC deduction, which necessarily includes your PF, life insurance premium, FD, ELSS, right? So all these things, just give me a minute, I'll be back. So here I was talking about ATC. So now when we talk about ATC, so this necessarily includes your PF provident fund, life insurance premium, FD, ELSS. So all these things will be allowed only under the old tax regime and not under the new tax regime. Under old tax regime also, here the maximum limit for ATC is up to 1.5 lakh rupees. Next, we have health insurance premium or medical expenditure. So this will be allowed under 80D. So again, this is allowed only under the old tax regime and not under the new regime. Then comes ATTTB, TTA and TTB, which is necessarily for your interest income. So this can be FD, RD or SB interest. So this will be allowed under old tax regime and not under the new tax regime. Under old tax regime, under ATTTA, so this will be up to 10,000 rupees, and ATTTB, so this is specifically for senior citizens, and here the deduction will be up to 50,000 rupees. Then talking about other Chapter 6A deductions like donations, interest on education loan, again, all these things will be allowed only under the old tax regime and not under the new regime. Then talking about employer contribution to NPS, right? So this is something we have covered in my first slide also, wherein I said that under the old tax regime, it will be allowed up to 10% of your basic salary. And if you're opting for new tax regime, you will be allowed a deduction up to 14% of your basic salary. So for this, you can claim deduction under section 80 CCD. Again, this is only for employer contribution to NPS. Now talking about other things here, HRA, LTA, again allowed under old tax regime only. Professional tax only under the old tax regime. Standard deduction, right? So this is also we have covered in first slide, wherein we have said that under the new tax regime, this is allowed up to 75,000, and under old tax regime, it is allowed up to 50,000 rupees. Then employees contribution to NPS. Again, this is allowed only under the old tax regime and not under new regime. Apart from that, when we talk about food coupons, which is necessary to reimburse your food expenses, so again, this is also allowed under the old tax regime and not under new regime. So this is basically the deductions and the exemptions that we have covered briefly. So if any one of you is having any specific doubt about any specific deduction or exemption or with regards to any limits or anything, you can put it in the Q&A section. So I will take up those to answer, right? So now this is about what are the important points that you should keep in mind while filing for assessment year 25-26, right? So we have covered everything extensively. Now let us quickly talk about the clear tax walkthrough. So here, if you are, filing your income tax return through clear tax, in that case, what are the simple process? What will be the process that is involved here? What are the benefits that you will get from the clear tax filing? So how easy it will be compared it with, you filing it directly from the income tax portal. Now, again, whatever walkthrough is there, so this is relevant only for ITR 1 and 4 users, because for ITR 2 and 3, still we are awaiting the official notification or official release of the, forms online. So all the forms have been released. We know the changes, but still it is not completely yet implemented by the income tax department on the income tax portal as of now, right? So now talking about what are the steps here. So I will cover it in a very brief manner. So you will basically have an idea about how the clear tax filing process actually works. So first you need to visit the clear tax website, which is cleartax.in. So you can just visit the clear tax website, and here if you can see there are two types of plan here. Either you can go with hire and expert plan, or you can go with self ITR filing. Now, what is the difference here? So if you are going with self ITR filing, in that case, you yourself are, filing the income tax return. So you are only uploading the documents, you're doing the calculation, and finally, you're only filing the income tax return, basically on the clear tax portal. So if you go with hire an expert, in that case, you will get a dedicated tax expert to file your income tax return. So once you submit all your documents, you need to sit back. So the tax expert will be there to, do the whole calculation. So they will explain you about everything, about how that is calculated, what are the deductions that, we have claimed and all those things. And once they do the calculation, they will send the report to you. You need to just go through the report. They will only do the filing. So the only task for you is to just upload the documents and check it before filing the income tax return, right? So depending upon what plan you need to choose, so you can either click on that. So you can either click on book now or start now. So depending upon the plan that you're selecting, right? So once you click on the necessary plan that you want to select, next process is to sign in or log into your Clear account. So if you're already a previous user, in that case, you just need to, log in. Or if you're a new user, in that case, you need to sign up, right? So once you do that, once you log in, so you will be able to see this page about what are the steps that is involved. So first thing is you need to link your PAN as well as the prefill. Then you need to add the necessary details, and you can file the income tax return and e-verify the same. Now, let us talk about how the process actually starts from the beginning. So here, the first and foremost step that you need to take is you need to link your PAN to e-file, right? Because now once you're filing it with the clear tax, so that is again a third party from the income tax department perspective. So here, basically the first thing is you need to link your PAN with the clear tax portal, so that we will be authorized. That is basically you are giving us the authorization to file your income tax return via clear tax portal. So that's why this step is important. So what you need to do is you need to put in your PAN card number as well as your date of birth, and you need to verify it with the help of Aadhaar registered mobile number or IT registered mobile number also, right? So once you do this, once you click on this PAN linking, so once you do that, next step is you need to upload your form 16. So I understand that basically almost all of you are a salaried individual. So in that case, you need to put your form 16. So if you have multiple form 16s also, you can upload it. All the form 16s you can upload here. And in case if you are not a salaried individual, in that case, you can simply skip this process also. So meanwhile, if you have any sort of doubts with regards to, what is form 16, what will be there in my form 16, from where I'll get it and all those things. So we have FAQ also on the right hand side. You can see the FAQ also. So you can click on the drop down and you can get more information also. Now, the next step here is to pre-fill your data, right? So once you click on the PAN linking, so next step is to pre-fill your data. So once you pre-fill the data, again, this pre-fill will be done through your IT registered mobile number only. So basically, you need to click on pre-fill, and then you will get all those data. That is basically pre-fill is whatever data is there with the income tax portal. So all those information, you are just importing it here so that you're not missing out on any of the information. So once you do the pre-fill with the, again, that will be OTP based. So once you click on the pre-fill, so pre-fill will be done. In that case, whatever details that you're seeing here on this particular screen, so almost all data will be pre-filled. That is to say the personal information, contact details, address, residential status, bank details, everything will be pre-filled, right? So once you pre-fill your personal information, again, if you want to update anything, if you want to change anything, you can do it here. Next step is to fill your income details, right? So here for your income, we have different heads of income. So we have classified it so that it is easy for the user to fill in the necessary details. So we have salary income, interest income, your capital gain income, house property, dividend income, business, freelancing income, crypto income. So all these things have been bifurcated. So whichever is applicable for you, so you can go ahead and fill that necessary schedule. And if you have pre-filled your data, in that case, almost all this income details will be pre-filled, but still you can go ahead and change anything, and you can go ahead and add anything also. Now, talking about the first head, which is salary. So if you have uploaded your form 16, in that case, almost all this data again will be pre-filled. So here again, you need to check. So you need to give any bifurcation. You need to, change anything, you can do it. So the TDS that is deducted by your employer, the TAN, everything will be pre-filled here, right? And also if you want to calculate the HRA exemption, that also you can do. So we have calculator here. So you can calculate the HRA exemption and you can enter it here. But one important change that has been done for assessment year 25-26 is with regards to the details that goes with the deductions and the exemptions, right? So for few deductions and exemptions, the income tax department is asking for extra details from this year onwards, which is, for example, for the purpose of HRA, right? Earlier, we used to only put in the HRA exemption amount. But from assessment year 25-26, you need to give the rental details, you need to give the basic salary details, you need to basically give the HRA component, the city that you are staying in, everything needs to be entered, and the portal itself will calculate the exemption amount. So kindly make sure that from this year onwards, you're entering all this amount, all these details here, right? So if you're doing it from the Clear Tax portal, again, you will get a separate pop up for the same. You need to enter all those details and you can put those figures here, right? So this is for the salary income. So now once you have entered the salary income, then comes the capital gains. Again, I understand, that most of you might have capital gain income. So that can be from a mutual fund or from a equity shares. So if you have any capital gain income, then you can just click on add details on gain from stocks, mutual funds. So here, as you can see, we have, tie up with multiple brokers. So we have around 50 plus brokers listed with us. So what you need to do is whichever is your concerned broker. So you need to, just go ahead and take a report and you can just simply upload it here. And all the data in that capital gain statement will be populated here. And in case if you don't have the report, you can use the ClearTax template also. We have basically have an Excel template, which is very easy for a layman to understand, put in the figures. So you can do that also. Otherwise, you can add details manually also. If you have only 1 or 2 capital gain details, you can enter it manually also. So this is for mutual funds and equity shares. Apart from that, if you have any sale of land and building, bonds, debentures, gold, jewelry, so everything can be entered here also, right? Apart from that, talking about RSUs, ESOP and ESPP, right? So nowadays we have seen, people are getting RSUs, ESOPs and all those things from the companies. So basically, which is from a foreign company. So that also you can easily enter it here. So we have tie up with Fidelity as of now, which is again a broker. So you can just, get the custom transaction summary report from the same and you can enter it here. Otherwise, if you want, you can add details manually also, right? So here that will be usually denominated in a foreign currency. So meanwhile, we have two options. Either you can go with INR or you can go with the foreign currency of USD. So till now, we have these two currencies being, supported in our product. So you can just enter the amount in USD also. So which will be basically converted into INR after that. So you can enter the figures here also. So this is for RSU and ESOP. So if anyone of you is having ESOP RSU sale, so you can enter the details here. Now talking about house property here. So when we talk about house property, so there can be two types here. One is the self-occupied house property, or that can be rental property, right? So this is for self-occupied house property. Again, we have house address, owner details, and for the interest that you're claiming, right? So that can also be entered here. Then comes rental property. So basically for which you're getting a rental income. Again, all the details of tenant, it needs to be put in. Then the rental income, property tax that you have paid, so all these things. So we have different heads, we have different schedules. So whatever is relevant for your income, so you can put in all those figures. Then talking about other income, like the interest income also you can enter here. So we have different heads for SB, FD, for your any other interest that you are receiving. So for everything we have different heads, so you can accordingly add all those details. If you are having any exempt income, any online gaming income, or any income from lottery winnings and all those things, so that can also be entered here. Then comes from the PGBP. So if you are having any freelancing income, any professional or any business income, or any intraday income, which is necessarily the speculative income or FN income. So we have different heads here, right? So whichever is applicable for you, you can go ahead and I'll add those details. Then comes VDA, which is basically the crypto income or virtual digital asset income. So we have seen nowadays, people are getting into investment in the crypto or in the virtual digital asset. So likewise, we have different brokers listed with us. So you can just import the tax report from them, or if you want to add details manually, you can do the same, right? So this is for VDA. So now, once you're done with the income sources, so whichever income sources is applicable for you, you can go ahead and fill in all those income schedules. After that comes the tax saving part, right? So here under the tax saving part, you can enter the whatever the deductions that you have done. Like for example, ATC, ATD, all these details will be entered in the tax saving deduction part. Next, the tax that you already paid. So that can be in the form of TDS, TCS, advanced tax. So all these things, again, you can enter it under the tax paid head. Then if you have any carry forward losses, which is for your business loss or for your capital losses, so that can also be entered here. Apart from that, if you're holding any foreign assets, or if you're a director in any company, any partnership, and all those things can also be entered. Now let us talk about tax saving deduction here. So if you can see here, we have, again, bifurcated all these deductions based on the sections. So whichever is applicable for you, you can enter the same. After that, again, this again same goes with the deduction part also. So whatever deduction is applicable for you, you can go ahead and put all those figures here. Right. So this is for the carry forward losses. So if you have already done the previous year filing from the ClearTax, in that case, whatever losses were there last year, so that will be auto-populated. But if you're using it for the first time, in that case, you need to enter all these figures here, right? Then comes the tax paid, that is TDS, TCS details. So here again, we have self-tax payment, that is the tax due payment that you're doing, the advanced tax which you have already paid, the TDS part, TCS part, everything will be populated here. If you have already pre-filled your data, you can also upload your form 26AS. That option is also there. So once you upload the form 26AS, all the data will be auto populated here under the respective heads. Now talking about the foreign assets, foreign income, or foreign taxes. So if you are holding any foreign assets, or if you have received any foreign income, or if there is any foreign taxes that has been withheld, in that case you will have to necessarily put in the figures here. So we have different schedules. For timing, I'm not going into the much depth of the foreign assets here. So if it is relevant for you, you can go ahead and enter all the data here. So once you have entered all the tax savings details, so then comes the tax summary part. So basically, this is the final page that you will get to see. So the tax summary page will have few details like your ITR type, right? So depending upon the income that you have, so your ITR type, that is ITR form, will be auto-selected, and also the beneficial regime, right? So whichever regime is beneficial for you, so that will be auto-selected. Still, if you want to go ahead and compare the regimes, and if you want to switch the regimes, you can do that also. And you will also get a AI summary of the calculation, right? Which I will show in my upcoming slide. So basically here your ITR type and the regime is also sorted. So if you're filing it from the income tax, from the clear tax portal, so you need not worry much about which ITR form is applicable for me, which regime should I select. So all these things will be done by the product itself. Now here, if you can see, right, so here you can see the total tax liability that you have, how much is the tax that you have already paid, and how much is the due. So everything will be reflected here in a very graphical or the pictorial representation also. So here, if you can see, right, so for a layman, which is very easy to understand, right? So if you go ahead and want to see the detailed report, you can click on view detailed tax report also. Basically that will be in a form of Word format, so you can just go ahead and see the detailed tax report also, right? So this is basically the AI summary of the calculation which we have introduced from this year. So basically here, this will tell you why the tax liability has been arisen, and this will also help you to plan for your next year, right? So this will tell you, so okay, you are not utilized this much deductions, which you can probably utilize in the next year, right? So you can accordingly plan your investments for next year also. So this is the AI summary of the calculation. Then, as I said, we also have a detailed report. So basically in this report, you can see everything, how the income tax has been actually computed. So what is your tax slab that you're falling in? What are the interest that is applicable for you? What is the TDS has been deducted? So everything will be reflected in this particular format, right? After that, so once you are done with entering all the details, once you are done with checking all the details, so if there is any tax payment due, you can go ahead and pay the taxes, or else if you are eligible for refund, you can go ahead with the filing. So in this case, let us suppose say a person has already paid the taxes. In that case, the next step for him to finish the filing, so he need to click on finish filing, and here he will get a OTP. So if you have missed to link your PAN earlier, so you can do it here also, and you can get the OTP, right? So once you are done that, so especially for self-filing plans, you will get the payment link, that is the payment page towards the end before filing the income tax return. But if you're going with hire an expert, in that case, first itself you need to purchase a plan, and after that only tax expert will be assigned. So in this case, assuming a person has gone for self-filing plan, so here if you have any code also, so that can also you can enter here to get the maximum discount. So once you put the code, so once you make the payment, so whatever is the payment, so once you make the payment, you need to give the self declaration, basically which is telling that you are verifying the correctness of the information. So once you submit the return, your return will be submitted. Next step is to do the e-verification. So here you need to get the OTP. So this will be done to your Aadhaar registered mobile number. We have other methods also. So whichever is feasible for you, you can go ahead and enter the OTP, right? So once you do the e-verification, then you will get this pop-up, which basically says e-verification is successful. So once you do this, the ITR filing is done, right? So as I already said, if you opt for clear tax, it is very simple. So almost if you do the pre-fill, almost all the data will be pre-filled. So if you want to make any changes, you can do it. If you want to, get any broker reports, so for all of this, we also have a video recording also about how you can download the report and all those things, right? So a layman or a taxpayer can easily understand the clear tax portal. So that's how we have designed it, so that it is easy for the person to do the filing in very few steps, right? So this is about the session. So right, so thank you so much. So I appreciate for whoever has attended the session. Hope this session was useful for all of you. So let me take up the Q&A session now. So if you have any sort of question related to the today's session, related to income tax return filing, related to the clear tax filing, you can put it in the chat box. So I will take up those to answer. For time being, I only have one question in the Q&A. Okay, so for ITR filing, we need to connect to you, or through website we need to book for the service, right? So any option is okay, but I would recommend you can go through the website. So maybe we'll have a partner page also with your employer. So we can, after the session, we can give you the link. So accordingly, you can, go to that particular link and get the things done. Okay, what are the charges if we go through the expert filing? So compared to self-filing plan, the expert filing will be, bit on a higher end. But again, we will make sure, we will give you the discounts and all those stuff. So basically, coming to the charges, so that basically depends on the plan that you are selecting, right? So we have 4 different plans. So depending upon your income range, depending upon the income sources that you have, so we have different sort of plans. So that is starting from 1,200 rupees. So it will start from 1,200 rupees, and that will go up to 15,000 also, right? But again, depending upon your income and your income sources, you need to accordingly select a plan. Right. So let me know if you have any other questions. Please put it in the Q&A box. Don't put it in the chat. So you can put it in the Q&A. Any coupon code for discount? Yes. So I need to check with my team. So after the session, we will get back to you with the coupon code and all these things, right? So again, for self-filing plan, let me quickly show the plans that we have for your reference. Just give me a minute. Right. So for self-filing plan, so that will be starting from around 300 rupees. So this can go up to around 1,500 rupees for self-filing plans. And for your tax expert, that is expert assistant, so this will be starting from 2,000 rupees, and this will go up to 15,000 also. But again, you will get a coupon code. So now for time being, we have 60% coupon code being applied. But let me check. So for Opportune, do we have any specific coupon code? If we have that, we will get back to you via mail. So if anyone is interested in buying the plan, so you can get it for the so you can get it. So someone is asking for show the plans for expert filing. Okay, so I'll just quickly share the screen that I have with regards to the plans. Just give me a minute. Right. So I hope my screen is visible. So basically, this is the expert assisted ITR filing. So here you can see the basic, right? So we have different criteria. So as I already said, depending upon your total income, so whatever is your income sources, you need to accordingly select it. So we have basic, premium, elite, and we also have luxury plan. So this is basically for the CFOs and all those things. So basically, these 3 plans will be applicable for everyone. So whichever plan is there, so you can accordingly select it, right? Okay, so there is one question. I get service pension of 1.25 lakh rupees as well as salary from employer. Can I declare the pension for TDS benefits, if any? So, right. So you need to check whether TDS been deducted on your pension or not, right? Because if it's only 1.25 lakh rupees a year, because I'm not sure whether it's per month, per year, I'm not sure. So if TDS has been deducted on your pension income, right? Yes, you can declare those details to your employer. So necessarily they will consider the same, and accordingly the TDS on your salary income will be done, right? So you can just check with your employer once about whatever is your pension income. You can check with them once and tell them TDS being deducted. So yeah. Is gratuity amount in CTC taxable in old or new tax regime? Okay. So see, whether you're opting for old or new tax regime, gratuity amount will not be, exempt or taxable on a full basis. So basically there will be a calculation involved there. So there are four different criterias on the basis of which we will be, calculating how much income is exempt and how much income is taxable. So accordingly, that will be, forming part of your income. Okay, so if TDS is not deducted, right? So in that case, you can just, simply give the details of the pension to your employer so that they can calculate the TDS correctly. But you will not get any TDS benefit here, right? Because basically, because by declaring this pension income, your income is exceeding, right? So your income is increasing. So that's why you will not get any TDS benefit as such here. But yes, you can declare to your employer, and necessarily they will calculate the TDS accordingly, considering your pension income also, and they will deduct the TDS. Okay, fine. Right. So let me know if there are any other questions. If you have any follow-up questions, or if there are any different questions, you can let me know here. Right. I don't see any other questions for time being. So let me know if there are any other questions. I'll wait for 2 more minutes for people to, ask their questions. So accordingly, we will see, we'll answer. So I will put the coupon code in the chat. Just give me a minute. So if anyone is, willing to take the plan, they can put this coupon code to get the discount. Just give me a minute. I'm just putting it. Well, if anyone is having any question, you can put it in the chat, in the Q&A. So yeah, I've given the coupon code in the chat box, not in the Q&A. I put it in the chat box, so you can just note it down. So while purchasing the plan, you can, put this coupon code to get the maximum discount, right? So I put it in the chat box, so you can just copy it from there. You can keep it for reference, and once you're okay, can't see. Okay, I'm just putting it in the Q&A also. So confirm whether you can see it or not. I put it in the chat as well as Q&A. You can just confirm. Okay. Can any one of you just confirm by, showing a thumbs up or something that you can see the coupon code? Cool. Right. Fine. So do we have any other questions or can we wind up the session? Let me know if you have any sort of questions, put it in the Q&A. Otherwise, we'll wind up the session. It's 5:05 already. So, right. Okay. So I don't see any other questions being asked in Q&A. So I hope, everyone have understood everything. So thank you so much. Thank you all for joining the session. Hope the session was useful. So if any one of you is interested, you can take the clear tax plan and you can get you can put this coupon code to get the maximum discount, right? So, right. Thank you so much. Thank you so much for joining the session. So yeah, have a great day ahead. Thank you.